Hi, let's talk about Carnival Corporation, quite a big company that suffers from the pandemic very much. I think they lost over 80% in a few months, and I show you pretty much later. But it's a company that operates as a leisure travel company. Trading is happening currently 12% below the site's estimated fair valuation. Earnings are forecasted to grow over 70% per year. The market cap is quite big, so almost 25 billion. Debt is not well covered by operating cash flow. Significant insider selling over the past 3 months, and shareholders have been diluted in the past year. On the Snowflake analyze, we see it has pretty good future growth, and yeah, this is actually not red but orange. And they also cut their dividends, and we'll see how much. I think 75% is cut. This is actually shorted, and there's a raise in short float, so this might be getting squeezed, but it's not sure about that. But anyway, earnings, the latest share price and events. So there was some of the earnings updates, debt financing, and trading halt. Market performance anyway, 1 year return 39%, and if we look at the long-term frames, 3-year return minus 62%, 5-year return minus 51%. Of course, it's a highly volatile share price. The industry itself suffers a lot because 3-year return we see minus 1.7, and those numbers are not beating neither the industry neither the market. So be careful on those sides. Valuation side, based on simple Wall Street, fair valuation should be around $25, so there's 12% upside. TipRanks has current analyzed price target of 29.22. It means a little bit less than 40% upside. In good scenarios, this could be reaching $39 per share. Pretty similar numbers have the market watch, so we see here stock price target in good scenarios 40, on average 27.3. So this is actually one of the days when, and one of the companies where those three sides matching on the fair valuation. And future growth is forecasted hugely, so annual earning growth is forecasted 70%. They had this basically decreasing cycle basically of the pandemic, but anyway, it's forecasted to grow, and they could be back in business. I mean, the same numbers that they had before the pandemic within 2 years. So November 2023, same numbers. But and also earnings per share growth is forecasted that they become profitable in the end of next year. Past performance, historical annual earning growth decreased by 57%, and currently the company is unprofitable. On the financial health side, we see here that they took a lot of a debt. And do they have cash? Yeah, so there's also the cash, 9 billion, debt 30 billion, and 17 billion of the equity. So this is actually becoming a serious situation where debt to equity ratio is 172%, which is considered high, and if they are not managed to finance that debt, so they are in trouble. But yeah, so that is one of the reasons why a lot of the companies got shorted, because of some of the problems that the company has in some of the periods where the revenue is decreasing, the earnings are decreasing, and so on. Balance sheet looks like this, so there's a lot of a debt, 30 billion, and they have forecasted dividend yield currently 0.05%. And yeah, so here we see that they cut it right after the pandemic. Yeah, March last year. And of the insider transactions, we see on the ownership, yeah, so there's insider selling happening currently. Max price, so last time they sold it in April, a few months ago, 40 million and 2.7 million. Last buy was last year's October. Ownership breakdown shows that institution holding 55%, general public 33, insiders 11, private company 0.2, and so on. Top shareholders, we see Vanguard increased, and so on the BlackRock as well. Last reporting holding date 1st of May, and this is actually what was the price then. So 4th of May, $26. So there's no information, did they sell some of them when it increased by 17%, or are they down? But anyway, there's mostly, I see here, most companies increasing and some of the companies are decreasing. Anyway, this looks long-term growing, but there's current situation that is showing that there's a short-term, very unluckily downtrend we see here. This is a highly liquid stock, by the way. It has huge volumes, so between 10 to 30 millions, and actually the highest points is here, $185 per share. And if we look at the simple safe dividends, we see here that the dividend growth decreased by 75%, and was there on a payment date, so actually we don't see here the information of the payments. We see that they decreased 75% of the dividend that they had. Anyway, earnings per share went to negative, and shares outstanding, yeah, they printed some of the stocks out, and total sales dropped almost to zero based on previous years. So we see here last 12 months, here 99% sales growth. This is actually very serious, so this is not as surprising that this is the institutions, some of the institutions are shorting this. But anyway, if we look at the max frame or 5-year frame, those who entered, for example, in January, they lost 83%. So that is very unlikely to see, but it happens. So that's why I recommend to find your strategy and diversify by industries, by company sizes, and so on. So never invest more than 5% in some of the companies, maybe 10 if you are very sure. Anyway, investing.com summary the stock for long-term investors as a sell by moving average, strong sell, and technical indicators neutral. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.